Early today, Rishi Sunak announced his winter economy plan. This replaced the standard budget to reflect the new lockdown measures and the impact on businesses and individuals for the next 6 months. As expected, a replacement for the furlough scheme was announced, but how will it work? What other measures were introduced? My name is John Davis, and in this short video, I'll explain the effect on your business. Firstly, employers and employees. The furlough scheme will be replaced by the new job support scheme for the 6 months from 1st November. This will allow employees to work part-time with the government part funding the remainder. To be eligible, an employee must work for at least 1/3 of their normal hours. For any hours that aren't worked, the cost will be split. 1/3 will be paid by the government, 1/3 paid by the employer, and 1/3 will be unpaid. This effectively means that the government will fund up to 22% of an employee's wages. The maximum government funding will be £697.92 per employee per month. Employers will also still be eligible for £1,000 job retention bonus for any previously furloughed staff who are still on the payroll through the job support scheme as at the 1st February 2021. So what businesses are eligible? Well, all small and medium-sized businesses are eligible. You don't need to have used furlough before. Now, large businesses will need to demonstrate a drop in turnover due to COVID-19. Now, the precise details haven't been announced yet. And how much will the funding be? Well, I've talked about the 1/3, 1/3, 1/3, but to give two examples, let's use example one, where an employee works 1/3 of the time. Now, let's say that employee earns £1,000 per month, and as I say, works 1/3 of the time. So therefore, the first £333 will be paid by the employer for the hours worked. For the remaining unworked hours, £222 will be paid by the employer, £222 by the government, leaving £222 unpaid. So in total, allowing for a little bit of rounding, the employer pays £555, the government £222, the employee receives a total of £777 of their standard £1,000 salary. Let's take a look at another example. Let's say the same employee on £1,000 per month works half the time. In this instance, £500 is paid by the employer for the hours worked. For the remaining hours, £167 is paid by the employer, £167 by the government, leaving £167 unpaid. So in this instance, the employer pays £667, the government £167, and the employee picks up a total of £834. So overall, it's not as generous as the furlough scheme, but it is going to help. Now let's look at the self-employed. The self-employed income support scheme will be extended by 6 months. Now this support scheme paid 80% of average monthly profits for 3 months back in the summer, and then 70% for the following 3 months. Going forward, the amount of grants will be broadly in line with the maximum funding for employees. Going forward, the government will pay 20% of average monthly profits. The eligibility criteria will be the same as for the previous payments, i.e. open to people who are self-employed. They were self-employed prior to the 5th of April 2019 and have had their business affected by coronavirus. There will be initial grants to cover the 3 months from November to January, and the 20% will be capped at a maximum grant payable of £1,875. There will be a second grant for the 3 months from February to April. The amount for that is going to be finalised nearer the time to see what circumstances are and how the economy is doing. The next announcements are related to hospitality and tourism. These are two of the sectors that have been hardest hit by COVID. Just as venues are reopening, they've now been hit by the 10 PM curfew. And of course, there's social distancing within venues limiting the numbers in. And of course, only a small amount of people are actually booking holidays at the moment. Therefore, to help out, the reduction on VAT in this sector, which was reduced to 5% a few months ago, will be extended to the 31st of March 2021. This is a 15% reduction on standard VAT rate of 20%. And basically allows the venues to either use these savings to cover their own costs or pass on the saving to customers to attract more people in. The next thing is related to cash flow. Cash flow, of course, is vital to any business. Even if the business has a strong future, running out of cash during coronavirus will see it fail. So to help with this, the government has given more time to pay back taxes and also the loans. So firstly, VAT. The VAT payments that were deferred by businesses from April, May and June 2020 were originally to be repaid by the 31st of March 2021. Now this can now be split into 11 smaller payments during the 2021 to 2022 financial year, i.e. the year to 31st March 2022, with no interest or penalties. So rather than one big lump sum on 31st March 2021, there'd be 11 smaller payments over that year to 31st March 2022. Similarly with income tax from self-assessments which were deferred from the 31st of July 2020 to the 31st of January 2021 can now be deferred an additional 12 months. So now you don't have to pay that until the 31st of January 2022. In addition, the standard tax payments that would have been due on the 31st of January 2021 can also be deferred the same 12 months, i.e. not payable until January 2022. The other bit of cash flow is the loans. The government has backed a lot of loans through either the coronavirus business interruption loans or the bounce back loans. Now, the deadlines for those are being extended to the 30th of November 2020 to apply so that more businesses can get access to those loans. Then for those who have access to the loans, there's going to be a pay-as-you-grow flexible repayment system. So firstly, repayment terms on the loans can be extended to 10 years. Originally, the maximum length of repayments was 6 years, so that's a 4-year extension. Bounce back loan borrowers will also be able to take 6-month interest-only payment holidays. I only pay the interest, and also other flexible payment holidays. Neither of these will affect the business's credit rating, which is kind of really important. So all in all, what the government's doing there is actually basically pushing back the payments of tax paid and also giving flexibility over the loans to give businesses more cash to get through coronavirus. So what's it mean overall? Well, I think most people recognise the furlough scheme, it can't go on indefinitely. It does cost the government too much, and to an extent is being used to protect jobs that are no longer viable. However, there's also recognition that it's unfair that there's a cliff edge on the 31st October when the scheme was due to abruptly end, after which nothing would be paid by the government, and that was going to lead to a lot of unemployment and redundancies in the next month or so. Now, the new scheme isn't as generous, but it will support jobs that are viable in the longer term. And in addition, as I mentioned earlier, employers who do keep on previously furloughed staff until the 1st of February will get the £1,000 job retention bonus for each employee, including those who are on the new scheme. However, you've got to ask how many businesses will actually pay 55% of the standard salary for someone who's only working 33% of the time. It will lead to business owners will need to make a genuine assessment of whether these employees will be needed full time again in the future, and whether therefore it's worth kind of taking this payment, effectively potentially 22% of the salary on the chin to keep them there for when they're needed in the future. It'll need perhaps a kind of a cash flow over the 6 months to include that £1,000 bonus as well to see the genuine cost of the business. In my opinion, perhaps a more targeted scheme could have been introduced, which would be more generous in the worst hit sectors and protect jobs in, for example, hospitality and tourism, and perhaps actually not have so much funding in other sectors that aren't so kind of badly hit. On the other measures, it is only fair that the self-employed get broadly the same treatment as the employed, but there's still nothing for the forgotten 3 million. The people who have missed out previously, not had any funding at all to date. This includes people like freelancers, the newly self-employed, and also a lot of limited company directors. If they didn't have premises or staff, there were no funding or grants at all for them to date. I accept that all the initial measures were pulled together quite quickly, and there's looking at some people who would miss out, but it seems that there might have now been time to actually work out how to support these people as well and fix this in at least some of the cases. I think the cash flow assistance on loans and taxes will be very, very welcome to many businesses, and I do like the pay-as-you-grow tagline. overall, I think, this has got to be a big help for businesses. I think, you've got to kind of accept that for the government, they are doing a lot here. We can all sit and perhaps argue and have an opinion on whether they could be doing better or differently, but I think there's a lot of money being put here to help businesses. Now, I hope that is helpful to you as well. If you have any questions, please do get in touch. As always, if you did find this useful, please do like the video and also subscribe to our YouTube channel for updates and more videos. Thank you, and I'll see you soon.